It's Monday, the 30th of October. Welcome, everyone, to Business Morning. We're live to you from Lagos, the home of Nigeria's news leader, Channels Television. Let's get the show started. I am Bosun Omofaye. The first issue has to do with the budget of 2018. The key question is, will President Muhammadu Buhari present the appropriations document to the National Assembly on Tuesday, the 31st? That's what some sources said. So that's one key question. Well, the biggest economic news that's going to be out on the streets this week. Tomorrow is the final business day in the month of October, and the administration promised that the National Assembly will get the appropriations for 2018 submitted in the month of October. And of course, on Wednesday, we have the first Federal Executive meeting, the cabinet meeting, which is a weekly, usually holds on Wednesdays. So we're keeping an eye on that meeting. Meantime, hearings in the matter of Oando Nigeria PLC against the Securities and Exchange Commission and the Nigerian Stock Exchange will be at the Lagos Federal High Court on Thursday, the 2nd of November. Oando is challenging the planned independent forensic audit planned by the SEC and the placing of the shares of the energy trader on no price movement. It's called a technical suspension. Today, of course, the management of Nestle Nigeria PLC will close the trading day. And, of course, that company last week reported an impressive record 16.5 billion naira net profit for its half-year ended June 2017. But let's get back into one major news last week. It was called the roads infrastructure. What's the Adeosun's roadmap, the finance minister's roadmap for roads infrastructure in Nigeria? It's called the RTF, the Road Trust Fund, the public-private partnership deal to fast-track the provision of federal roads by allowing private sector operators to fund these roads in exchange for a tax credit scheme. And of course, Adeosun says this will, of course, would take no shine off the annual road budgets that are done via the Ministry of Power, Works and Housing. That's the Babátúndé Fáṣọlá's ministry. So the key question is, how will it work side by side with the annual road budgets? That's one story that we're unpacking today with Tajuddin Ibrahim, who is the head of research at Chapel Hill. Denham is live to us here within the hour. You don't want to miss that. And, of course, the business of budgeting. It could be one of the, if not the most messy year so far for the budgets. We're on 2016 budget into the first quarter of 2017. Then we got the 2017 budget in place by June. And the key question remains, how long will the budget 2017 last? But the Buhari's administration looks set to meet the deadline, if they make that tomorrow, to present the 2018 budget. And in the words of the minister in charge of budget and national planning, Udoma, says, well, Nigeria has to bite the bullet once and for all and stop the rollover and the cycle of overlap of budgets that we've seen for the last couple of years. That's in the news this morning. What else is in the news? Let's do a quick review of the markets. For you, the stock market was down about 0.34% last week. In terms of volume, the market was down slightly, and you can see a bit of a red. The full final trading week in the month of October. And look at the sectors: insurance, consumer goods, industrial goods, oil and gas, despite almost 1% gain by the banking sector. And the banks are the ones we're going to talk about. That single green shoot there you see at the top there is where the conversation with Obaniju Usofo from Afrinvest will be in the next 1 minute. Very quickly, look at the NESD, over-the-counter market. A positive week on Friday, 0.85%, the USI index. And the market cap added a little bit above the 406 billion. About 3 billion was added. And you can see the rest on the flip side. By volume, value, and deal, it was a bit tepid for that sector. Then, of course, let's move on to the fixed income very quickly. The top 4 most actively traded treasuries and bonds via the FMDQ OTC Securities Exchange. You can see the Naira bonds there for the midterm and 2 long-dated paper, 2036 and 2037. You can see the total transactions there at the bottom of the page. Then if you look at the treasuries, that's a little bit on track, isn't it? Okay, put those things at the back of your mind. Let's talk about the banks, really. Let's bank on the banks, as you want to put it. Obianuju, Nsofo from Afrinvest, good morning. It's good to have you here.
Thank you for having me.
When banks are reporting, the market seems to be a little bit warm. Sometimes could be really hot because the banks are at the back of everything and every stock we have on the market. So what does the current trend of earnings tell you?
Well, you're right. Over the last 2 weeks, we've seen a number of banks release Q3 2017 earnings scorecard. But what we've seen is sort of a mixed performance. Typically, we see a trend, especially in the Tier 1 space. Take, for example, last year when there was a lot of challenges in the banking industry, as well as FX liquidity. The devaluation that occurred in June 2016 sort of gave a boost to non-interest income. So we saw banks around this period record significant gains in terms of non-interest income. Also, we saw CAR come under pressure, not for the Tier 1 banks, but for the Tier 2 banks. This is that risk-dominated FX loans were sort of revalued upwards and sort of gave pressure to the CAR. But however, the Tier 1 banks, they showed resilience. Overall PBT and return on equity for the industry came out positive, but not for the Tier 2 banks. Then you fast forward to 2017, as at half year, we saw these banks sort of move towards trading in fixed income securities in order to give a boost to non-interest income. Given the heightened risk landscape, you see that banks are not willing to lend to the risk, to the real sector. They will sort of alternatively shift towards investment